welcome to Economy and Markets TV, the show that takes you around the world of economic and financial news. I'm Dave Okenquist, Senior Research Analyst here at Dent. Today I am joined by Dent Research co-founder and Senior Editor Harry Dent. Harry, welcome aboard.
Yeah, nice to be here, Dave.
Absolutely. Harry and I are going to give sort of a midday update on the markets. I know yesterday was crazy. Things are coming back a little bit. I think at last check, the Dow's up 200, NASDAQ up about 50. But, we're not certainly not out of the woods yet with what's been going on. Harry, we were both looking at 1987, and I know that's going to make people a little bit scared about what happened, but let's talk about the stuff we looked at today and what you see, what could be a scenario in the markets.
Well, one thing we've been talking to our subscribers at Boom and Bust about is that when a bubble finally bursts of this magnitude, the first crash is usually 40%, give or take, in 2 to 3 months. And that's the problem. People stay with the bubble and they think, well, I'll get out in time. No, you can't get out when that happens. And my problem is this correction thus far since January 26th has been like a normal correction. And I was thinking, well, what could make this January top in the Dow and the early March top in the NASDAQ look more like this 40% correction in the next few months? And I look back at 1987, one of the many bubbles we studied. In 1987 started very slowly at first, a little crash, a little rally like this we've seen in the last few months, and then suddenly went down 40% in literally 2 weeks, and most of that in 2 days. So I'm not saying this is the most likely scenario, but it is a potential scenario, and this would be a coup d'etat for this incredible QE bubble that has been more extreme than anyone in history. So I'm just warning people, this could happen. By early May on this model of the 1987 crash, we could be down 30 to 40% in the stock markets, and most of that could happen, say, after a bounce here in April, which is starting to happen. It could happen in a couple of weeks.
Yeah, well, I'm looking at the chart here. It tracks pretty closely, and you're right. I mean, and like you say, the problem is once that bottom falls out, there's no time to decide what to do, right? It'll be too late.
And that's the problem. Everybody's like saying to me, okay, Harry, you keep predicting this bubble's going to burst. But hey, I'll get out when I see it starting to happen. And my problem is when these bubbles burst, it is so violent that 50% of the entire bubble burst, which tends to be 80%, which is more than anybody expects, happens in the first couple of months. So people don't get out, or they panic and get out after that happens. So we're just saying, better to be safe than sorry here.
Yeah, so looking at this scenario, I've got the chart here up on my screen, and that kind of a rapid crash would imply roughly around, let's call it 5,300, 5,400 on the NASDAQ. That's about 30%, right? That's scary stuff.
And that is typical, Dave. Like the first bubble crashes tend to be 30% to as high as 50% in the first 2 to 3 months. And this could happen if it's the 87 scenario at this point in just a couple of weeks. So, I'm just like, beware. That's all I'm saying.
Yeah, certainly one thing to keep an eye out. May's, a little ways away, about a month or so. But what do you see sort of more short-term, week to 10 days sort of thing?
Well, again, the markets actually just bounced off their 200-day moving average, which is the strongest support you can have. So that was kind of expected. So they would probably bounce for maybe a couple of weeks even. But the more tepid the bounce, the worse. And that's when I would worry the most, that maybe around late April, this bounce could end, and then we could have possibly this sudden crash into very early to mid-May at the latest. So I keep telling our subscribers at Boom and Bust that the next few weeks is critical. If the markets can hold here, then the upside has more potential. But if they can't hold here, or they start to crash in late April, early May, then it's saying we've already seen a top.
Gotcha.
In late January for the Dow and early March for the NASDAQ. So we'll see. There's no way to predict the short term like we can the long term, but I'm seeing more signs of danger ahead. But we still said back weeks ago that we could see one more rally on the Dow to 28,000 into as late as August. That's still a possibility, but with recent events, that's looking a little less likely.
Yeah. All right. Well, so we're going to keep an eye on that. Certainly, if something like this 1987 scenario does play out, you have absolutely need to have a system that will protect you from that. The best way to do that is to really follow our editors, follow Harry Dent, go on our daily commentary from economyandmarkets.com. We've got our readers, they follow all this stuff so that you can be prepared. So please do so. Go to economyandmarkets.com and share your email address. Harry, thank you so much for coming on. Thank you, everybody, for watching. And we'll keep an eye on this. And something else breaks, we'll have you back.
Yeah, this is the time to keep an eye on these trends. That something's going to happen in the next month or two.
Thanks, Harry.